Pick up on what the US CPI as well as PPI means for the global markets. Could it lead to higher market volatility? And what does it really mean for India? There is a connect here. Steve Englander joins in on the show right now. Steve, hi, morning to have you on the show. Just wondering how to dissect the PPI as well as CPI data, because, you know, the Fed pivot is quickly disappearing, it seems, and it means that I guess it's going to be higher for longer.
We think so. We changed our Fed forecast from cutting 4 times this year, beginning in June, to cutting twice, probably with the first cut in July. The issue is that, inflation is staying up. We initially thought it was an aberration. It still might be an aberration, but we're less sure. Last 3 months of inflation are higher than the corresponding months the year before, and it's the first pickup in a while. I'd say the PPI gave some relief today, not enormous. It suggests that the 2 decimal places, there's a good chance core PCE will be 0.30 or less, slightly less, not a lot less. So that's a bit of a relief. I think it means that some of the risk that's beginning to percolate into the market, that, it's not only that the Fed may not cut as much as we expected, but they might not cut at all. Some people saying that they're hiking. I think that risk has diminished a little bit, but I think the market is still nervous on inflation prospects here.
Steve, is it too early to assume that we could see a change in terms of how interest rate trajectory would move for 2024? Because this could really be, inflation will always cyclical, and there could be cyclicality in terms of what we've got from what we got for US inflation data for the month of March.
Well, I think the combination of the, CPI and PPI, CPI is certainly disappointing. I mean, annualized core is around 4%. I think core PCE probably comes in relatively benign, but the Fed made it clear that they're in no hurry to cut policy rates if there's any ambiguity on the trajectory of inflation. And enough of the FOMC participants are seeing ambiguity right now. So we think it's going to, we don't think they're going to cut in May. We used to think they would cut in June. I'd say it's still possible, but it's gone, below 50% in our calculation. So we see July as the first possible easing.
Given that some corporates, Steve, seem to be raising alarm bells, talking about a prolonged high interest rate scenario worldwide, the fact that with China's economic situation, as well as the fact that US inflation is rising, all of this could potentially lead to economic turbulence. Would that be a worst case scenario? Is that something that we would be maybe looking at, or too early to tell?
Well, look, I think there's a risk. I think that one outcome of the the sequence of inflation numbers is that it could be that inflation's going up. It could be that it's kind of going to stabilize, and it could be that it's still going to go down. I think the range of outcomes has widened, and I think that worries the market. I think especially the view that the possibility, that's not baseline, but the possibility that maybe we're close to a trough in inflation, I think is worrisome right now. I think the market can deal with the slow pace of cutting rates. I think if you were to tell the market right now, look, cutting rates are out of the picture, we would see risk trade a lot more poorly than it has so far.
Your time. Thank you, Steve, for joining in and sharing with us your outlook on all that's going on across the globe.
If you like this video, then like, share and subscribe to ET Now.